or wave 5. Now, it's obvious that what we really want to concentrate on is this C wave. And I want to talk to you about some strategies that we can apply and some techniques that we can utilize to maximize some profit out of these moves if in fact we continue this correction, as I believe there is a high probability. The first thing is I do want to spend a moment going over how this particular top is composed. Once you reach your record top, which is going to be the fifth wave or the conclusion of the impulse phase, you go into a classic ABC correction. Your A and B are going to both be a 3 count, meaning you'll go A, B, and C. That will take you to the conclusion of A, and then B will be A, B, and C, which will conclude your B wave. Now, traditionally, what you'll look for in your C wave is a wave that can be characterized with a total of 5 waves, and the count is simply 1, 2, 3, 4, and then 5. Now, as you can see, I've plotted 3 different potential 5s, and they're going to be truncated, a flat correction, and a standard correction. And as far as the standard correction goes, I want you to notice where the target is, and that's right around 1650, and at the same time, I want you to note where that one gap is that we believe will come back to be covered or traded through, and that's just above that particular point. Now, based on this new information and this revised wave count and the fact that we are fully blown in a correction, the following is going to be my trade strategies for the next couple of weeks. As I that the wave 1 found within this corrective wave C is probably over. My sentiment is we should find a bounce. We've got good support, 1808, 1817. We have good Fibonacci harmonics right in here. And I would expect this market to bounce up a little bit. In terms of the straight numbers, we can go ahead and plot a Fibonacci retracement to get a more clear or realistic idea. As you can see, I've gone ahead and I have entered in a Fibonacci retracement. Now, the retracement we're looking at starts at the conclusion of our B wave, starts at the beginning of the C wave, and encompasses the entire distance of wave 1. Our 38% retracement takes us to 18. Why is that? If we take a look at that gap that appeared some time ago, you'll notice that it's sitting right above that 1650 target, a move to 1650, in other words, a standard correction in this area would in fact fill the gap, and thereby trading to a point in which I believe we will find the conclusion of our correction and the beginning of another impulse phase. Time parameters, that's something Elliott Wave doesn't forecast. But I will tell you this, traders. I think that we have two very good trades coming up. As I said, our first setup is let's see what kind of rally we can see built in this area. If, in fact, we find a bounce, it's already back to 1817. It's well